Today I will talk about depreciation, and the things I write down in blue color is the thing you need to remember. So the first thing is cost minus AD equal to net book value. Okay. Then there are also three methods of depreciation: straight line, reducing balance, and also revaluation. Okay, the steps will be: first thing I underline percentage, underline method, underline the per annum. Then you need to draw down the format. Yeah. Okay. Now let's go to first question. Okay. Why they say charge depreciation is actually yeah, to spread the cost over the useful life. Okay, now let's go to next question. Okay. Okay. First thing first, let's highlight the percentage method and per annum. Okay. Then we need to do the format. Okay, now let's look at the things we just highlight. Okay, so you want machinery, so let's put machinery. Let's list down the format. Okay, so machinery, so let's go to machinery this. Okay, so okay, then is it per annum, right? So after 1 year, 1 year, then let's continue. You want 31 December 2022. Let's put inside. Okay. Okay. So this 1 year is, so what he do so the depreciation will equal to 20%, 20% times the reducing balance method means times net book value. Okay. So the net book value will equal to cost minus AD equal to net book value. So 20K minus 7,200. Yeah. So you get 12800. Okay, so so the cost is still the same one, the same price you buy. Well, the AD stand for add. So this add this so 7,200 at 2,560. So you get 9,760. And the net book value will be equal to cost minus AD. So cost cost minus AD. So you get 10240. Okay. So now let's go to the this one loose two lah. Okay, I will scroll down. Okay. So now we are doing loose two. So it said the valuation, right? So the format will be okay. So the format will be first the opening, then you something something, then you depreciate it, then you get the closing. Okay. So the opening is first day, right? So the opening is 2,100. Then continue. Okay. So this one is a purchase, right? So plus 300. Then then this thing. Uh, then the closing date. 31 is the closing one. Closing date is 1850. So you can find x equal to you can find x equal to 550. Okay. So this x is actually the depreciation. Okay. So you want us to find what? Want to find depreciation. So the one depreciation is 2560. And then for the depreciation is 550. So the answer is B. Okay, now let's go to question number 3. Okay, so let's read the last line. The last line he say correct. They want to do correction. So basically right hand side is correct one. Okay, okay, yeah. So what you want us to do is correct. So uh yeah. So the thing we need to underline percentage method and per annum. Okay. So this one is correct one. Yeah, this one is This one is not correct one. Okay. So the correct one is say depreciation equal to 25% per annum straight line. Straight line so times cost. So the cost is this amount put inside. Okay. Yeah. So let's go next line. What he do is a depreciation. What he do is 15% times this cost. 15% times this thing. So oops. Yeah. So from here to here you need to add 1500. So 2250 add 1500 equal to 3750. Okay. So the effect will be this depreciation increase. Okay. Depreciation is an expense. So expense increase, so the profit will decrease. Say profit will decrease by 1500. Okay. Okay, now let's go to question 4. Okay. So first thing percentage method and per annum. Then let's do the format. Okay. So the let's read the question. The question want us to find uh the question want us to find depreciation charge. Okay. Okay. Let's do the X for asset X. So draw down the format. Then you see the asset X want us to per annum. So after 1 year, after 1 year, then the depreciation will equal to 10% straight line. So 10% times the cost. So the let's see what it say. 2022. Okay. So after 1 year is become 2022 December 31. Yeah, I am until here lah. Okay. So for asset Y, okay. Let's draw along a format. So asset Y is 2000 ish. I say Y is 10% reducing balance, 10% times net book value is equal, okay, net book value equal to cost minus AD, cost minus AD. So you'll get 200. So both are the same, 200 and 200. So the depreciation charge is same. So this one is incorrect and incorrect. Okay. Okay. So so for this one, yeah, yeah. So for this one fully depreciation something. Okay. Let me draw something. Okay. So yeah. So X is using the something straight line. Okay. Okay. So the graph. Okay. So the graph will be on your net book. This one is a net book value. While this one is a time. I will say this one is year. Um, okay. The net book value will go down like that. So the gap between year 0 and year 1 will be the same as the gap between year 1 and year 2. Okay. Then for y you are using reducing. So the net book value will be like that. So you say you want us to see. You want us to see fully depreciated mean the net book value equal to 0. So this one this one is, so uh you can see x, you can see x dp first, right? X become 0 first, right? Yeah, so this one is correct. So the answer is C. Okay, yeah. So now let's go to next one. Now let's go to question 5. Yeah, okay. The first thing first you want us to do is percentage method and per annum. Then let's draw down the format. So what he do is he's born on this day. So the cost is, okay. When he is bought something new, right? Okay, and he bought something, and it's a new, right? So the D will equal to 0. Okay, then yeah. So let's continue. Yeah, let's continue. So 1 year, 1 year you get okay. So the depreciation will be, okay, years reducing balance 20% per annum. So 20, so is 20% times the reducing, so is net book value per annum, so equal to 20% times, okay, net book value will be cost minus AD equal to net book value, cost minus AD, so you get, okay. So uh, and then this one, the cost is the same. The AD stand for add, okay. So this add this this add this, you get 1600. Then the net book value will be cost minus AD, cost minus AD. Okay. Oops. Okay. So now let's continue, because he want the 1 May, right? Something, right? Let's continue. So 1 year like the after 1 year, so it's become 2022 May 1, which the do the same with the question. Okay, so the depre will equal to same 20% times net book value will equal to 1280. Okay, let me do something. So the cost is still the same. The AD will add no add. So this add this yeah. Okay, this add this equal to 2880. So the net book value will be cost minus AD. So 8000 minus 2880. Okay, okay. Then then on this 2022 May 1, he sell for 4050. So what he sell for 4500. So is so let me write here, right? Sell for 4050. Okay, okay. So the to find the profit, by default profit is amount you how much you spend and also how much you receive, right? So this one is equal to minus net book value plus the amount of receive. So equal to minus 5120 plus the 4050. So you get minus 1070. Okay. So you say minus, right? So the will be C lah. Okay. Because it's selling at a loss. So it's minus 1070. Yeah. Okay. Now let me go to next one. Okay. What's the reason for charging depreciation? Find keyword useful life. Yeah. So it's over the years, this benefit from years actually useful life. Here is B. And revaluation method normally is used to lah. Okay. So it's based on experience. Okay. Continue. Okay. So yeah. The first thing we'll do is highlight percentage method and per annum. Percentage nothing no. So this one wanna see So what he want? They want to find profit or loss on the sale of the van. Okay. By default, profit equal to amount you spend and also the amount you receive. In this case, we'll minus net book value plus the receive. Okay, then then let's say uh one cost and then had had been depreciated means one AD. Okay, one cost and then AD is this amount. So okay, so the net book value will equal to okay plus this one is sell for this amount, so it's the amount you receive. So get 250 again. So it's so profit. So it's an income. So you credit it. So credit 250. Okay, however, this one these are not the answer. Why? Okay. So you profit, right? So you credit income statement, but it will debit the disposal. Then what he wants us to do is the disposal account. So the disposal will debit. So his answer is boy. Yeah. So let's continue. Continue. So okay. Why depreciation? Why? Okay. So to avoid overstating the value, okay, of NCA, as you can see, the depreciation will reduce the asset. Okay. Then let's continue. Yeah, over its lifetime means useful life. Oops. Then okay, this historical cost no lah. Yeah, to match some to match capital expenditure income. This one is actually matching principle. This one is actually prudence. So the answer is A. Okay, let's continue. Continue. Okay. Okay. So the first thing is yeah, percentage method and per annum. In this case, okay. In this case, per annum is actually the years. So in 5 years, okay. Then the I think percentage is actually the $50, and the method you're using is straight line method. Okay. Okay. So yeah. So let me draw the form. Okay. So uh at one January, so let's say at the end of 3 years, right? So let's use the at the first year, first year, then let's say January 1. Okay. So the one is cost this amount. Yeah. So when it is new, okay, depreciation equal to 0. Okay. Then let's see the 1 years, right? Okay. So this one from here to here, from here to here. Okay, this one is 1 year. So first year I become okay, first year because you want the at the end, right? So first year end will be December 31. Okay. So the depreciation will be because it has useful life and scrap value, right? So this one a bit special. So the a bit special. So it's cost minus the residual value. Okay. So it's divided by the okay, useful life. So let's continue. Okay. So okay. So will equal to the cost will be 850 minus residual value will be the scrap value of 50. And then useful life will be the working life of 5 years. Okay. So get equal to okay. So let's continue. He said cost will still be the same. Well, the AD is the at okay. This you'll get 160. Then yeah, okay. Then let's continue. Continue. He said let's continue. Continue. He said first after 1 year it become first year become second year. Okay. So knowing is a straight line, so the depreciation will be the same as 160. One So the cost will equal to the same, while the add will keep on add. So this add this will get 320. Okay. So let me bring down this thing because I don't have enough space. Okay. Okay. So still the same thing. So this 1 year, 1 year. So dep the depre will still be the same. 160. Then then after 1 year is third year. Okay. So the cost will be the same. Or the add, you just add, you just this add this. Okay. Then the net book value equal to cost minus AD. Okay. Then what he said, at the end of 3 years he sold for this. So it's third year, third year, and third year end is this here. Then what he say is he sell for this amount. Okay. So the by default the profit is amount you spend and also amount you receive, right? So the profit will equal to minus net book value at the amount you receive. So it's minus 370 at 100. So you get minus 270. Okay. So what he said, what was the profit, right? So it's minus 270. Minus 270. So it's B. Okay. Okay, now let's go to next one. Okay. Okay. So the first thing he want us to do is percentage method and per annum. In this case, I want you to slightly change a bit. Yeah. So what he said, in the year of purchase, yeah, this one is year, right? This one is actually can mean per annum. Okay? Think like that. Okay. Okay. Now now let's do the format. So So say is bought year one, 1 January. Okay. Capital use, yeah, I use first year lah. First year. So the January one. Okay. So it's cost. So this one is a new one, right? So okay. So the depreciation will be zero lor, because it's a new one. Then okay. Then continue. And what he want per annum, right? So it's 1 year. So the destination will be 1 January lah. The depreciation will be equal to 20% and then reducing balance. This is a net book value, cost minus AD. Okay. So the second year, the cost will still be the same. The AD stand for add. So this add this. So the net book value will be cost minus AD. Okay. Then think let's continue. Okay. So we'll get a 20% net book value. Okay. Okay. Let me minimize it. So the cost will still be the same. The add is equal to this add this. So the net book value, the cost minus AD, Okay. So okay. So on this day, he sell this amount. So third third year, 1 January 1. Third year January 1, he sell for 22K. Okay. So by default uh profit equal to amount you spend and also amount you receive. So equal to minus net book value. Okay. So continue. Okay. So this one is loss, right? So we'll debit incomes. Loss is an expense. So we'll debit income statement. Okay. So debit income statement lor. These two. Yeah. Then the amount will be 3,600. So the answer is D. Okay. Now let's go to question number 12. Okay. So first thing first, they want us to uh yeah, percentage method and per annum. Then let's do the format. I'm gonna remove this. I say the and had been depreciated. So that had been depreciated is actually AD. Okay. So you say the cost equal to 35,000 and the AD will be equal to 12600. Okay. Then also you say per annum, so is 1 year. So the depre will equal to 20% reducing balance, 20% times the net book value. So the net book value will go to cost minus AD. So 1 year is AD. AD is actually this at this. So what he wants us to do is 1 May 2022, run the provision for depreciation. This is also known as AD. So the AD is 178080. Continue. Okay. So the first thing I want us to do is this one. So let's highlight the, or in this case the per annum actually this one years 3 years. Then the percentage is a residual value, and then method will be straight line method. Okay, so okay, format. Then let's continue. So so in 1 years, right? So is after 1 year, so the depre will equal to the formula equal to cost minus residual value over the useful life. Okay, let me kind of move this. Oops. So this one residual value is 100. Okay, working life also known as useful life. Okay, so the cost will equal to the same. The AD is at, so this at this, and then the network value become cost minus AD. Then then let's continue what he wants us to do. Okay, On 1 April 2022, it sell for this. 1 April 2022, it sell for this amount. So, so the profit will equal to net book value plus receive equal to minus 1200. So it's point. Okay. Okay. So let's continue. The risk statement about reducing balance method not correct. So it's A. So remember the graph. So this one is reducing, right? So it's actually like this. First it drop a lot, then drop lesser. Let me do this. Yeah. So at first it drop a lot. So it's higher at early years. Early years at first. So it drop a lot, so it's higher depreciation. Yeah, so question number 15, homework. And let's continue. Okay. So you want depreciate something. Okay. Depreciate is an expense. So debit income statement. Debit income statement is A. Okay. Okay. Let's continue. Okay. This one homework. Okay. Okay. This one. Okay. It gives you a hint. This one is actually residual value. And then this one. This one will be the useful life. Okay. So let's continue. Okay. So 18. What's the effect? So yeah. Right. Okay. Effect so towards the arrow. Okay. So let me see. So this one's the arrow. Yeah. Okay. This one also the arrow. Okay. So yeah. So cross at right. So right hand side cross. Left hand side is tick. Then cross at right. Okay. So yeah. Okay. So what he do is debit motor vehicle. Actually there is he should debit uh repairs. Oops, I think I do something wrong. So let me be, this one is correct, this one is wrong. Okay. Yeah. So yeah. Then continue is a uh then depreciate. Got this one debit, this then this one is a cost. Okay. So it depreciate uh 20%, and the balance actually refer to the cost. Okay. Okay. So what was the effect of this error? Okay. So yeah. So in this side the depreciation, it only record repair, right? So the depreciation should be 0. Then in this side it has repairs. Okay. Let's say repairs. Let me let me yeah. So in this side it has repairs. So repairs equal to 2000. Well, this side only motor vehicle, so there is no repairs. This side has repairs 2000, repairs 2000. This side the there is no repair, so the repairs will be 0. Okay. Then yeah, then yeah, then this debris from here to here is plus 400. Well, this repairs from here to here is actually minus 2000. Okay. Okay. So let's say the repairs is also is an expense. So this one expense. Well, this one repairs is on, shit, sorry. Uh Depreciation is also is an expense. So this one expense plus 400. So this one repairs is also an expense. So this one expense minus 2000. Okay. In overall the expense is like in overall expense minus 1600. So the profit will up 1600. Okay. So the profit will up 1600. So it's A. Okay. Yeah. So okay. So this one motor vehicle, how it affect it. So this one will be yeah, the book value. Because the one motor vehicle is an item, right? So you'll find net book value. So the net book value will be 2000 minus 400. So we'll get 1600. by the way, it shouldn't record it. So previously the, let's say, okay. So this one will affect the net book value. So previously it will have cost, yes, net book value. So this is there is no cost, so the net book value is equal to 0. Then then from here to here is at 1600. So we'll increase 1600. So the answer is A also. Okay. Now let's go to question 19. Okay. So the first thing we need to do, oops, sorry. So the first thing we need to do is percentage method and per annum. Okay. Full year, right? So you use year lah. So this one is actually per annum. Okay. Okay. So yeah. Now we do the format. Okay, here's this one a bit special. So let's focus on the year of 2020 lah. Okay. This one you use another way we do. Okay. So this one is using straight line. So the tips will be C year end. No. This one you are using uh per annum. So the tips you see year end. Okay. So the year end, right? You at first you buy 20K, then you buy 10K. So in total you buy 30K. Okay. Then the depreciation will equal to 20% time cost. So the answer will become D. Okay. So let's continue. The last side of the last line is one disposal account. Okay. Okay. So I think this one is the Also, you want us to find profit. So by default, the profit equal to minus net book value at the amount you receive. So you sold for this amount, right? Okay. But the net book value will not show. Okay. They share the profit 584. So the net book value will become 2516. Okay. Then let's say this cost, right? And then this net book value, right? Right. The no cost is this amount. Then the net book value is this amount. So AD will be this minus this will be 3774. Okay. Okay. So okay. So AD is also known as provision, right? Provision for depreciation. By default is because it has provision, so it has credit balance EB. Okay, provision, so you credit it. Then this one by default is plus. Okay, positive figure. So but when you sell an item, so you need to remove the item. So you remove net book value. So by default also is cost minus AD. You remove net book value. So now you remove net book value. So you also need to remove AD, also remove the cost. So 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 if you remove AD, you need to debit the provision for depreciation, and then you credit the disposal. Okay. So you want disposal, right? So disposal you want us to credit. So answer is C. Okay. Continue. So this one you just homework, then continue. Okay. This one I also homework, then continue. Okay. They use reducing balance method. So this one is theory part. So the net book value and also the year. So reducing balance, the graph will look like this. So early years, more depreciation. Means early early year, net book value drop more. Yeah. So continue. Okay. Yeah. This question, let's do it together. So first first thing first, let's underline. Okay. Then let's see what it means. We want to do the correct one. So tick correct at right. Correct at right. Okay. So this one okay been debited, so it's incorrect one. So this one machinery repair is the correct one. Okay. Yeah. Okay. So let's do the format. So you want cross and tick. Okay. Okay. So your machinery repairs will debit repairs by 2000. What he do is debit machinery 2000. Okay. Then this machinery is also an asset. So he has a price for asset. So the price is also the known as cost. Okay. So then he do depreciation, go to 20% times the cost, equal to 20%. Okay. So okay. Then this depreciation will add right, will increase the add. Okay. This depreciation, so the AD will will um increase by 400. Okay. So okay. So this one repairs an expense. So it's a no cost. Also no debris. Okay. So the AD will not increase. So from here to here, it increased by 400. Okay. So yeah. So in conclusion, the AD increased by 400 by 400. Okay. So the question want us to find AD. The question want us to find AD. So previously the AD is 2300. Now add 400. Then is 23400. So the AD will be 23400. So it's C. Okay. Oops, sorry. I do a mistake though. So supposingly the machinery repair is correct. This one is wrong. So let me swap the places. I do a mistake. Sorry, my bad. Yeah. Because I haven't ate breakfast yet. Yeah. So let's say okay. Okay. So yeah. So this one from here to here, the AD should decrease by 400. Okay. So the AD will equal to previously is 2300. Okay. AD is 2300. Then minus 400. You'll get 23,000 minus 400. Get 2600. Okay. So the answer is void. Okay, we are done.